please consider downloading the worksheet that goes along with this video. It will help you to record the most critical information from the video so that you'll have notes from which to study from in the future. We've talked about what ethical behavior means in accounting, but we have not talked about why ethical behavior is so important in accounting. The only way to address this is to look at the cost of unethical behavior. Unfortunately, we have quite a few examples to look at, such as Arthur Andersen, an accounting firm, Enron, an oil and gas company, Countrywide Financials, a home mortgage company, Lehman Brothers, an investment bank, Olympus, the Japanese optical equipment company, World.com, a telecommunications giant, Tyco International, electronic component manufacturer, and Bernie Madoff Investment Securities, an investment company. And that's just to name a few. I'm going to use the Live Entertainment Corporation of Canada Inc., a theatre production company, and their auditors, Deloitte Touche, to demonstrate the cost of unethical behavior. The Live Entertainment Corporation of Canada Inc., called Livent for short, was a Toronto theatre production company founded in 1989 by Garth Drabinsky and Myron Godlick. The company brought popular shows such as Phantom of the Opera and Joseph and the Amazing Technicolor Dreamcoat to stages across North America. However, from the day the company started, they consistently created false financial statements with the help of the accounting staff at the company. In fact, in order to keep track of the fraud, the company created a specialized accounting software which tracked two sets of books, one for the public and the other for the owners. By 1998, it was discovered that the company, over the years, had overstated their revenues by $34 million, and they had understated their expenses by $30 million. They did this in two ways. First, they capitalized their operating costs instead of expensing them in the period in which they occurred. And second, they did something that they called the expense roll. This is where they recorded the expenses from the current period in a later period, in order to delay the expense recognition. Finally, Drabinsky and Godlick stole $7 million and defrauded investors out of over $500 million. The company's auditors during this period were Deloitte and Touche, presently known simply as Deloitte. The company failed to discover the fraud mainly because they were not willing to sever their relationship with Livent, even when huge red flags started to appear. They did not exhibit professional skepticism with regards to the activities of Livent, and they were willing to accept whatever management told them. In the end, Drabinsky and Godlick were found guilty of fraud and forgery. They received 7 and 6 years of jail time, respectively. Both were banned for life from serving as directors or officers in any public company. Maria Mezzina, the CFO of Livent, a Canadian CPA and former Deloitte and Touche partner, was fined and suspended for 2 years in Canada from acting as an accountant. 3 auditors from Deloitte and Touche were found guilty of professional misconduct and fined hundreds of thousands of dollars. In 2014, Deloitte was ordered to pay $85.6 million in damages to Livent's creditors. The judge in the ruling noted that Deloitte could have put a stop to the fraud in August of 1997 by simply refusing to sign the improper financial statements. This would have saved creditors and investors hundreds of millions of dollars. In 2018, the case was still before the Supreme Court of Canada and is as yet unresolved. Looking at the 5 fundamental principles of conduct from my other videos, what did Livent breach with regards to these principles? Everyone involved in the fraud did not exhibit professional behavior because they did not protect the interests of the public. They did not show integrity because they were not honest in that the financial statements did not tell the truth. They were not fair because they did cheat. They showed a biased picture using the false financial statements, and they clearly showed only self-interest with regards to benefiting from their lies. Both Drabinsky and Godlick were known to be bullies, and they did exert undue influence over both the accounting staff and the auditors at Deloitte and Touche. What is the overall cost of accounting fraud? which really happens because of poor ethical behavior. Financial markets work because investors trust the financial statements. They do so in part because they believe that the auditors are there to ensure that the financial statements are free of material misstatement. This allows investors to make informed investment decisions, which allows for the flow of money in and out of the stock market, which is one of the foundations of a well-functioning economy. If that system breaks down and investors no longer trust the integrity of the financial statements, or they no longer trust that the auditors are doing their job, they will become reluctant to invest in companies. This will result in a breakdown of financial markets and would have a severe and negative effect on the economy as a whole. Ethical behavior is the basis of any well-functioning company and overall a well-functioning economy. Without ethical behavior, trust would be at an all-time low, and our ability to function as an economy would be seriously jeopardized. What else is clearly necessary is for accountants, in their role as record keepers and auditors, to exhibit courage when they see situations which are questionable. Had the accounting staff at Livent simply refused to stay silent, to not be open to undue influence by Drabinski and Gottlieb, the company would never have been able to perpetuate this fraud. Accountants are the gatekeepers who must protect both the reputation of the profession and the interests of the public. So, as an accountant or potential accountant, how should you deal with an issue such as accounting fraud when you find it? Well, that's the topic for a future video.